The minute you drive off the dealer's lot with a brand new car, it's beginning to depreciate. In fact, most cars depreciate by 20% in the first year on the road. Collision and auto policies only pay up to the cash value of your car. If you purchase a car worth $30,000 and you total it within the first year, then the insurance company will only pay you what it's worth in the market. Let's say $24,000. If you total the vehicle 3 years down the line, then again the insurance company will only pay what is its current market value, which means that it could be substantially less than $24,000. Unfortunately, the scenario gets even worse. If you took out a loan worth $28,000 in order to purchase this car and you total it within the first year, then the insurance claims that they pay you is not even going to cover the loan itself. That's where Gaap insurance could fit in, where it covers the difference between the claim check amount and the amount you owe the lender. Hi, Vincent Chan here, and in today's video, we're talking about what is Gaap insurance and whether or not you need it. If that sounds good to you, make sure you smash the subscribe button and ring the notification bell to always get the latest and greatest from The Simple Dollar. And remember, if you want to find this content and loads more, you can simply go to thesimpledollar.com. Gaap insurance covers the difference between your car's current market value and the amount you actually owe the lender. So if your depreciated value of your car is $24,000, when you total it, then the insurance company will give you a claims check worth $24,000, and the Gaap policy will come in and help pay off any difference that you owe the lender. If you lease your car, then the leasing company could include Gaap insurance in its leasing agreement. In some cases, your collision or comprehensive policies could include Gaap insurance. It's important to know if you have this kind of coverage, and if you are unsure, then simply you can read the policy's fine print or simply give your agent a call. You can buy Gaap insurance at an auto dealership, a car insurance company, or even a lender. Typically, large carriers such as Allstate or State Farm includes Gaap insurance policies as part of an add-on to your policy package. If you do want Gaap coverage, you should definitely check if your preferred insurance company even offers it, because some don't. Because automobiles typically depreciate with value as soon as the dealership hands you the key, it's important for you to purchase Gaap insurance as quickly as possible. So how much does Gaap insurance actually cost? Well, typically add-on coverage is going to increase the cost of your insurance policy, and when it comes to Gaap insurance, it typically costs about $20 a year. Car dealers do offer Gaap insurance to their customers. However, if you're looking for the best rate, then typically auto insurance companies do offer the best rate for Gaap insurance. So should you get Gaap insurance? And although it is not required by state law or anything along those lines, Gaap insurance is reasonably priced, meaning it typically makes sense in most financial situations to get it. So when is Gaap insurance actually worth it? If you lease a vehicle, then your leasing company might actually require you to purchase Gaap insurance, so they might include it as part of the leasing agreement. Typically, when you lease a vehicle, it's going to be brand new, meaning that that vehicle will depreciate in value very quickly. So the leasing company will require you to get some sort of insurance, liability, collision, any comprehensive package, which also includes Gaap insurance. If you make a down payment that is less than 20% of the purchase price of that vehicle, then you should consider getting Gaap insurance. If you don't make at least 20% of that down payment, then the actual cash value of that car could be worth less than how much you owe the lender as soon as you drive it away. The high sticker price of today's cars could make long-term financing options very attractive for car buyers. It's easier to afford payments on a 60-month loan compared to a 20-month loan. But each payment that you make goes towards principal and interest. If you finance your car for more than 2 years, then you probably need Gaap insurance, because the difference between the cash value of your car and the amount you actually owe the lender could be coming up very quickly, sometimes as soon as 1 year. And before you actually purchase a car, you should definitely check out the resale value of that car by going to Kelley Blue Book. Some car manufacturers might make cars that depreciate a lot faster than others, making resale a lot harder. Used cars typically have a trade-in value and a retail value, and that trade-in value is going to be less than that retail value. If you finance a car that depreciates very quickly or has very low resale value, then you should probably get Gaap insurance. So when is Gaap insurance not worth it? If you finance a car for the long term, you might not need Gaap insurance the entire term of that loan. When the amount you owe the lender actually dips below the amount of the cash value of that car, then you can stop getting Gaap insurance. Or if you paid cash for the vehicle, then you don't need Gaap insurance either. As always, thank you so much for watching. If you have any questions on this topic, feel free to leave a comment down below and we'll get back to you as quickly as possible. And remember, if you enjoyed this video, remember to smash that subscribe button and ring the notification bell to always get the latest and greatest from the Simple Dollar. And while you're down there, also feel free to hit that like button. As always, remember you can always find this content and more by visiting thesimpledollar.com.